Hello everyone, welcome to Business Learning School. I've started a new series where I'll be describing different accounting and finance terms so that you don't get confused. So today's topic is what is accounts receivable? Accounts receivable are amounts that customers owe for purchases that they made on credit with a company. In other words, it's the amount of money customers owe a business for credit sales. So what does accounts receivable mean? Most companies have an accounts receivable system that allows customer to purchase goods or services on credit and pay cash for them at a later point in time. This strategy can increase sales, build customer relationships, and even create consumer loyalty. Even though these advantages are strong, companies must evaluate each customer on an individual basis to see if they can trustworthy enough to extend credit terms. If the customer proves to be creditworthy, the advantages of creating an account for them will outweigh the risk that the customers will default on purchase and the company won't receive its payment. Accounts receivable is recorded as a current asset on the balance sheet and is often viewed as one of the most liquid assets a company can own. Let's take a look of an example so that you can understand it better. So Bob's Consulting is a CPA firm that specializes in tax and consulting and allows its client to pay on credit. When a tax return is finished, Bob sends an invoice to the client with credit terms that allows the client to pay the bill within 30 days. On the day of the tax return is finished and the invoice is printed, Bob would debit account receivable and credit the revenues accounts for the job. Recording this entry agrees with the matching principle of accrual accounting because revenues are recorded when they are earned instead of being recorded when they are collected. When the client pays his invoice, Bob would record the payment by debiting cash and crediting the receivables amount. This way, the accounts receivable balance is cleared out and the revenues recorded equals the cash received. So, if we summarize the whole thing, we can say receivables means the money that customers owe a business for purchasing goods or services on credit. Thank you so much for watching the video. Please don't forget to subscribe to my channel and hit the bell icon.